stablecoin liquidity just hit an all-time high. And that kind of capital doesn't just sit still. It's the biggest shift we've seen since the last major Bitcoin rally, and it could be the spark that reignites serious momentum. So, in this video, I'm breaking down why an all-time high in stablecoin liquidity could be the fuel behind Bitcoin's next breakout, how Circle is gaining ground on exchanges versus Tether, and what the Bitcoin Bull Score Index is telling us about the current market momentum. Today we're diving into something huge. Stablecoin liquidity has just hit an all-time high of $220 billion. And that could mean some very bullish signs ahead for Bitcoin. So, what does this actually mean for price action, liquidity, and momentum in the market? Well, the $220 billion mark is the highest we've ever seen. And if you've been in the space for a while, you'll know that it's historically been a powerful leading indicator for Bitcoin. When stablecoin market caps rise, it usually signals that more capital is flowing into the crypto ecosystem, which tends to put upward pressure on Bitcoin. But why does that happen? Well, stablecoins like Tether's USDT and Circle's USDC are essentially dry powder. They're capital waiting on the sidelines. When their supply increases, it's often a signal that people are moving money into crypto and parking it in stablecoins before deploying it into Bitcoin and other altcoins. So when we see a jump like this, it usually means people are getting ready to make moves. Now let's zoom in a bit and talk about the two big players, Tether and Circle. Over just the past week, Tether's market cap jumped by $2.5 billion, and Circle added $1.2 billion. That's a $3.7 billion influx into just two stablecoins in 7 days. That's a strong signal of capital coming back into the ecosystem, which historically has supported Bitcoin price increases. And we're not just talking about a one-week fluke here. The 30-day expansion of these stablecoins shows a similar trend, and maybe even more important. Over the past 30 days, Tether has added $5.3 billion, and Circle has added $6 billion to their market caps. So these aren't just spikes, they're sustained increases. Both are now growing above their 30-day moving averages, which is a pretty reliable on-chain indicator of improving liquidity. When stablecoin growth exceeds its short-term trend, it usually reflects rising demand and deeper liquidity in crypto markets, and that tends to provide a solid foundation for Bitcoin to rally. So we're not just seeing more stablecoins. These increases are statistically meaningful when it comes to projecting Bitcoin's next moves. But here's where things get a little nuanced. Not all of that new stablecoin liquidity is making its way directly onto exchanges. At least not yet. Tether, which still dominates the stablecoin market in terms of overall supply, hasn't fully rebounded in terms of exchange presence. Back in mid-February, we saw around $43 billion worth of USDT sitting on exchanges, primed for deployment. As of now, that number has pulled back to about $38 billion, a roughly 12% decline. That's still a significant amount of liquidity, but it suggests a portion of that capital is either staying off-platform, sitting in cold wallets, or perhaps waiting for a clearer signal before re-entering the market. On the flip side, we're seeing a different story with Circle. The amount of USDC on exchanges has climbed to $6.5 billion, marking its highest level since March of 2023. That's a notable shift, and it creates a fascinating divergence between the two dominant stablecoins. Tether remains the heavyweight in total supply, but Circle is gaining momentum where it counts, on exchanges, where capital can be quickly deployed into Bitcoin. This difference may reflect distinct user bases or strategic preferences. Circle is often favored by institutions and regulated entities, thanks to its perceived compliance and transparency advantages. So, while both stablecoins are growing, it's Circle that continues to be positioned for action. Either way, it signals that more dry powder is edging closer to the market, and that's something Bitcoin bulls will want to watch closely. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. So, with all this liquidity flowing in, the question becomes, what does this mean for Bitcoin right now? And to answer that, let's bring in an interesting tool called the Bitcoin Bull Score Index, created by the guys over at CryptoQuant. This is an on-chain index that helps us measure overall market sentiment based on several factors, including liquidity, price momentum, and technical strength. Last week, this index was in bearish territory, sitting as low as 20. But as of today, it's jumped all the way up to 50, which is neutral territory. Now, neutral might not sound that exciting, but the jump from 20 to 50 is actually a major shift in sentiment, as many analysts were calling for the bull to be over last month. What this really tells us is that the underlying market structure is strengthening. The improvements in stablecoin liquidity, combined with Bitcoin reclaiming some important on-chain resistance levels, have helped push the index higher. That said, we're not in the clear just yet. For truly sustained rallies, like the kind we saw in 2020 or late 2023, we'd want to see this index push above 60. That's the zone where price moves start to become more self-sustaining, as momentum feeds into itself and capital flows accelerate. But jumping from 20 to 50 in a week is a strong signal that we're heading in the right direction. So, to wrap things up, stablecoin liquidity hitting a record high at $220 billion is a pretty big deal. It tells us that fresh capital is flowing back into crypto. And historically, that kind of influx has been a precursor to positive momentum in Bitcoin. It's like refueling the tank before a potential move upward. What's really interesting right now is the dynamic between Tether and Circle. Even though Tether is still the largest in terms of total market cap, it hasn't fully returned to exchanges just yet. In contrast, Circle is seeing a surge in exchange presence, hitting 6.5 billion, its highest level since March 2023. That shows us that capital is not only entering the space, but also positioning itself to be deployed, especially from players who may favor Circle for its regulatory clarity. And finally, the Bitcoin Bull Score Index gives us a good pulse check on sentiment and structure. Jumping from 20 to 50 in just a week shows a real shift in market tone. We're not in full bull mode yet. Anything under 60 is still considered neutral. But it's a clear sign that the market is stabilizing and potentially gearing up for the next move. If we keep seeing strength in stablecoin growth and liquidity flows, we could be setting the stage for a more sustained rally. So keep an eye on the liquidity, watch how it moves onto exchanges, and don't sleep on these early signals. They've been solid predictors in the past. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.